Next up, I'd like to bring up Ray. Ray, I know you're here with us. I just unmuted you, Ray, just to let you know. So just for everyone else's knowledge, Ray is a graduate of the University of Illinois at Urbana-Champaign. Prior to joining the CME, he practiced as a CPA in Arthur Andersen Small Business Audit and Tax Division, Chicago from 1983 to 2004. He was a mentor of the Chicago Mercantile Exchange and served on the S&P 500 Pitt Oversight Committees, Technology Committee, and Index and Options Market Nominating Committee. He co-founded and served as president of Local Knowledge Pioneering on Online Trader Development from 1997 to 2004. With 30 years of trading and trader development experience, Raymond founded Archimedes Partners in 2005, as well as an intuitive development training. Without further ado, ladies and gentlemen, I bring you Ray Burchett. Ray, are you here with us?
Yes, I am, Jim, and thank you for that introduction. And can everybody hear me okay? And hopefully flip the screen over and everyone will be able to see me in a minute.
Just flip the screen over,
There
just hit. Perfect, there you go.
A few people could, all right, there we go, I got it. And so can everyone hear and see me okay? Just a few people chime in, let me know that you can hear and see. I'd appreciate it. And then I'll move forward here. Tommy, Elizabeth, Frank, Edith, James, okay, thank you. We're going to go. We're going to go. All right, so title, how can the E-mini trader, retail trader, compete with High Freq, Algo, and the Fed? And what I want to do is really develop a clear understanding for how we, at that retail level, can place and keep ourselves in the best position to anticipate and take advantage of price movement. So the first thing I want all of you to do is relax. Relax. Don't get bunched up about taking notes and everything else, because at the end, what I'm going to do is I'm going to give you a resource page that's going to allow you to come to free training. It's going to allow you to get 150 minutes of free videos, okay, that are the foundation of my training. And all you got to do is do a screen capture or a snip of the last slide. It'll have all that information. And it'll even have a link to a page that's going to basically summarize my presentation. So I'm making it super easy for you. All I want you to do is take a deep breath, relax, and just listen, and know that I'm going to give you everything at the end, so you don't miss out on anything, and that's going to include free access to some very powerful stuff. Does that sound good to everybody? All right? So just relax. And then also, the only thing I do want you to do for me is, as I go through this, jot down your questions. I'm going to have about 20, 25 minutes of presentation, and I love answering questions. In other words, I love to stand and deliver, okay? So that's what I really want you to do, is just as a question comes into mind, jot it down, and in about 20, 25 minutes, start throwing them up in the question panel, and I'll answer, okay? So nice and simple. So that's what I look like. And my gift to folks is that I see and have experienced this world of trading from the core out. My gift is helping folks, aspiring traders, finding their way to the work that matters most and preparing them to do it best. In other words, cutting right to the chase, so we're getting the most out of our time and effort. Really building the foundation for long-term success. Please know that there are no shortcuts. Anytime you look at something, an advertisement where someone says, I made X amount of dollars or did all of that, or even worse, if you see a guy standing in front of a mansion or a sports car or a yacht or a plane, run away. Run away. Okay? That's just all seductive advertising. Let's understand what financial independence means. That means we have the ability to make our own decisions about price movement, to be able to effectively make our own decisions about price movement, okay? So when you see any of that stuff, run away. As far as people coming to trading, I divide them into three categories: pretenders, dreamers, jumpers, dreamers, and pretenders. All right? Jumpers are folks that have had success in the past as an entrepreneur and have background in athletics, have background in music and performance. In other words, they understand what it takes to prepare to compete. They understand what it takes to get up after getting knocked out. They understand that you have to just keep grinding away at something, and at times it's going to seem hopeless, but then all of a sudden there's a breakthrough. And so those are jumpers. They come to trading understanding that there's no shortcuts, that they're going to have to do the work, that they're going to have to find their way to the absolutes, accept them, hold themselves accountable to them, and then they'll have the foundation they need to start developing their knowledge and competency and moving forward. So jumpers come to trading. They know that it's going to be a commitment, require a commitment. They're going to have to do the work. Dreamers come trading. They think, you know what? It's going to go up. It's going to go down. And I can even sell them before I buy them. How cool is that? I've got all this great technology to tell me when to buy or sell. Or I'll just sit in the trading room and follow somebody. Or I'll wait for somebody's newsletter. You're going to fail, and it'll be epic failure. Pretenders, they have no intention of doing the work. They come to trading because it gives them something to talk about at the cocktail party or in the bar. It's a placeholder until the next thing. I can't help pretenders. I can't help dreamers. I can help the jumpers. I can help the folks that understand it's going to take work. There are no shortcuts. And it's irrelevant how much money I've made as a trader. What's relevant is the knowledge and competency I can help you to develop to become successful as a trader by making your own independent decisions about price movement. So what I want to do in the time we have here is help you to really understand what's taking place in the market. Can you guys see my screen okay? Okay. So thank you. I really want you to help you understand what's taking place in the market. Thank you for everyone chiming in. Good. I had someone who wasn't seeing them, and I was thinking I had my pause button still, but right. So really understand what's happening in the market and how to best to compete. And then take away a tangible understanding. Elizabeth says there's a problem with the sound. Scale of 1 to 10, what's the sound quality for everybody out there? All right, I'm getting 10s across the board, so it's might be something with your internet connection, Elizabeth. Sorry. And once again, I appreciate everyone chiming in. I have a heck of a time with body language and facial expressions over the internet, so I appreciate it. All right, so we're going to take away a tangible understanding for how to best support development and performance going forward. So what I want to do is give a little bit of a background so we understand how we got to this place, the current state of affairs for trading. Over the past 30 years, futures trading has been transformed by decision-making really shifting from humans to machines. When I started this trading in 1983, I thought I was really prepared. I had a strong professional background. I was a trained CPA from the top school in the country for accounting, University of Illinois at Urbana-Champaign. Had job offers waiting for me before I even graduated, even though I was probably at the bottom of my class. Less than 30% of folks who started in accounting actually graduated with a degree. and then had the experience of Anderson and what was really the most cherished division to get into, small business audit and tax. And plus I had a pretty good background in athletics. So I thought I was ready to become a trader. And I almost quit after my first 18 months. I was at the exchange from 7 in the morning till about 4 in the afternoon. I was going home and doing tax and write-up work in the evenings and on weekends to pay the bills. In about 18 months, I was burnt up. I had nothing left in the tank. I was going to walk away, and I was going to go and get my teaching certificate because I had my CPA. I knew I could get my teaching certificate. So I was going to teach accounting and coach football in high school. My dad convinced me to come back and give it another 6 months. So I did that under very specific conditions, and these are things that I get into my training, things that you'll hear about if you take me up on the free offers that I'm going to post here at the end. So when I was in the pit, it was hard card and pen, and you know, open outcry and pushing and shoving and all the physical battle that went with it. And then about post-1985, computing got affordable enough and understood well enough that it started making its way more frequently into trading. And incredible things have happened since then. In 1987, we had a very secret meeting at the Mercantile Exchange up on the upper trading floor. I mean, this was so secret. It's a great story, but I don't have time for it. But bottom line, they introduced Globex, and as members, we had to approve the operating agreement so it could happen. And it got passed because we said Globex can exist, but it can never trade during regular trading hours. All right? Only post-market and pre-market. Then we had to modify that operating agreement in 1997 to bring the E-minis online, to have them trade side-by-side regular trading hours with the big S&P, and that was at Donnybrook. But that absolutely transformed the industry. And the Merc that was always the redheaded stepchild to the Board of Trade exploded and ended up buying the Board of Trade. So it was the biggest transformation in our industry. I went through all of it as a trader and as an entrepreneur, as co-founder of Local Knowledge, and really one of the early pioneers in online trader development. So now volume is being created by machines. And we need to understand where we fit in that environment. To give you an example, High Freq traders and Algo traders are basically using the same platform. The High Freq guys are motivated to spend more money in squeezing latency out than the Algo trader, but they both have a mechanized trade. And the other thing that we need to understand is when economic releases come out, that data is fed right into their algos. In other words, it comes in as zeros and ones. They're trading on that information instantaneously while the rest of us are reading it. So there's no way we're going to compete when those releases come out. There's no way we're really going to compete on the open. We need to understand that, and it's okay. I'm going to show you there's way better opportunities for us. But we need to understand the disadvantage that we're at certain times. And because of their machines, because of their technology, because of their networks, we're not going to be able to compete on economic releases. We're not going to be able to compete on the opening. And we just need to accept that and understand it. So let's figure out where we can compete. So to better understand our place, the opportunity, we need to understand what the strengths are of each of these groups. And again, I'm going to give you a link to a web page which goes into all of this content in detail. It's hidden on my website. I'm going to give you that link, so don't worry about taking notes. You'll be able to go back and reread this stuff. So high freq traders control the scalp. That's trading for a tick, one price change to the next. Okay? And when the market conditions are set up to trade for a tick, one price change to the next, the market's likely in between key averages like exponential moving averages. That's what's shown on here. Again, another area of exponentials. That's where the high freq guys like to hang out. That's where they really like to trade. Algo traders control fair value. In other words, they have their own proprietary way of measuring fair value. There's no one right way to do it. I like to take the midpoint between the exponentials, and that gives me fair value. And then depending upon volatility, that tells me what the possible stretch is away from fair value. And then I'll trade it. That's basically what algos are doing, but that whole trade is mechanized, so they can react faster than I can. In other words, they're going to be consistently trading in the sweet spot of fair value. But that's okay. That's okay. Then there's the trend, and the Fed controls the trend. The institutional traders control the trend. Let's understand, looking at a chart, it's not really hard to understand if the market's going up or down, right? You don't have to be a genius to figure that out. We also understand that the market follows patterns. When you spend a little bit of time studying technical analysis, watching the market, you can tie into those patterns and get a pretty good sense for it, right? So trading should be easy. Why is it that less than 2% of traders really are able to make a living at it? Well, it's because our egos get the best of us. We believe it's easy instead of understanding how dynamic it really is, instead of taking ourselves on that deep dive to understand what it really takes to compete. And what it really takes to compete as a trader is developing the awareness to understand how the market is going to follow the pattern. And each time, it's likely to follow that pattern a little bit differently. So that's what we really need to understand. The market is always going to follow the pattern, but it's always going to follow the pattern a little differently. And the high freq guys are set up to play a probability that they've identified as the highest for the way the market's going to follow the pattern given certain parameters. Algo traders have done the same thing. Institutional traders, they don't care, because their position is hedged against owned assets, stocks, bonds, options, forward contracts, you name it. So what they're doing is they've done their own math, and they figured how many S&Ps they have to buy to protect appreciation in the market that their basket may not get them, or how many S&Ps they need to sell to protect the downside, the erosion of value to their basket should the market correct, instead of having to dump and rebalance and all of that stuff. So they're not making short-term corrections. They're in it for the long haul. So despite all of the network and infrastructure the high freq and the algo guys have, despite all of the generational knowledge and deep capital that the Fed and the institutions have, the market still goes out of balance. It still goes out of balance. And we want to pick our spots and participate when that market goes out of balance. So we're going to end up making fewer trades, much higher quality setups, and our focus shifts away from anxiety and frustration to certainty, confidence, and commitment. And so in this image, again, these are exponential moving averages. This is a 30-minute chart. The green is a 50, the pink is a 26, the orange is a 12, and the blue is a 9. So those are exponential moving averages. The dark blue lines in the background are my proprietary value levels. And those are computed based on long-term information. I mean long-term information. And that's something that I teach in the circus. You don't need special software, but you need a deep understanding of where they're coming from and how to do it. And then on the bottom here is the Williams Awesome Oscillator. And all these tools I use with others. I also use Ichimoku, which is the equilibrium cloud. I have a proprietary way for tracking volume independent of all hardware and software. Very powerful way for really being in tune to the energy in the market. I have a special way of looking at the information in the trading dome. All of those things add to the decisions, but this is the big picture. This tells me when the market's likely to be out of balance and what to do about it. And I don't want to get into a whole lot of discussion. I'm going to give you free access every morning for an hour from 7 to 8 o'clock. I talk about these things. I go over the previous day. I say what I'm looking for in the current day based on these tools. I'm going to give you free access to that. Every morning, 7 to 8. It's one of the things I'm going to give you at the end. But what I really want to accomplish with these slides, with these images, is just show you some examples of the market being out of balance, how it tips its hand, and how we have a great opportunity to participate. And so these opportunities, they don't happen every day. But they happen enough over the course of a week or a month that we can make a very nice living. And once these directional trades trigger, that's what happens when the market gets out of balance. We take on a directional trade. These tools tell us a bunch of stuff. They give us an acceleration point. They give us a likely first target for profit. They identify profit targets beyond that first target. And then they show us the current. They give us opportunities to trade once that directional trade falls off. They help us to identify fair value opportunities. In other words, they give us a map, a really good understanding for how the market's likely to follow the pattern. And once we develop conviction for these things, we become consumed by them. We develop even more awareness for what they're telling us, greater awareness for when to enter and exit the market. So a couple of things that, big mistakes that traders make, especially trading the E-mini, is that they look at time frames that aren't relevant. In other words, that aren't representative of the energy in the market. They look at 1 minute or 2 minute or 3 minute or 5 minute or 10-minute charts. In personal experience, my belief, those time frames are way, way, way too small to be representative of the real energy in the market. That's why I never look at anything less than a 30-minute chart. One of the fastest ways people can improve their performance is start looking at longer time frames, charts that are representative of the energy in the market. Next thing we need to understand is that we have to wait for the market to align with our strategies. In other words, we can't sit down and make it up as we go along. In fact, we only want to trade when we already know what we're going to do. In other words, we're already certain of state, we're already confident in strategy, we're already committed to waiting for market alignment. That means we know what we want to do, why we want to do it, how we're going to do it. We have all of those answers before we even sit down to trade. In other words, we've got a future vision. And those are the only conditions we should trade under. Because when we have that future vision, then we can develop the greatest awareness for when to enter. And that puts us in the best position for success. And so that's where we want to put our effort in. You know, there's two levels of decision making in trading. There's a foundational level and a functional level. And the foundational decision making develops the awareness to make the right decisions at the functional level, the right decisions about price movement. So one of the foundational decisions that has to be made, that we have to have great conviction for, is that we have to wait for the market to show its hand. And I guarantee any of you that have been trading, your two biggest challenges are, one, patience, waiting for the market to align, and then the second is conviction to consistently execute when that market aligns itself. Let's understand where patience comes from, or what it takes to have patience. Patience requires energy. Does everybody get that? That patience requires energy. And think of energy as conviction. And conviction is genuine knowing. In other words, knowing that we've done the work. That we're focused in on the work that matters, that we're prepared to do it best. That gives us that conviction, that genuine knowing. And when we have that genuine knowing that we've done everything that we can to put ourselves in the best position to compete, it's a lot easier to wait. And when that alignment presents itself, because of that genuine knowing, it's a lot easier to consistently execute. So again, what we do at the foundational level is really key, because it's what develops that conviction. Unfortunately, most traders, they just focus on the functional, figuring out where the market's going. They either don't, or I should say, they're either unaware of the need to develop the foundational decision-making components, or their ego tells them that they don't need to. How do I know? Because that first 18 months, my ego got the best of me. It was all focused on price. I figured I had the foundational stuff squared away because of my accounting background, my success in sports. I had all the foundation I needed to be successful as a trader. Well, I didn't. So the thing that turned me around was I went back and I started dotting the I's and crossing the T's at the foundational level. And that's what I'm really good at helping people do, because I went through it. So we need that foundation in place. When we have that foundation in place, we're going to make the right decisions to develop the awareness we need to compete with the Algo, the HFT, and the Fed, and the institutional trader. In other words, we're going to be able to have the awareness, the patience, to wait and to consistently execute when the market gets out of balance. So again, when we have that certainty, confidence, and commitment, we know what we want to do, why we want to do it, how we're going to do it. John asked, when is the market out of balance? When it's overbought or oversold. And you have to be able to identify when it's overbought or oversold. And it's accepting and holding ourselves accountable to absolute performance truths. Those absolutes. In any profession, there's absolutes. Engineering, medicine, accounting, law, even sports and music. They all have absolutes. And they provide the foundation from which we assimilate our knowledge and develop our competency. And it's where our real power comes from, in accepting and holding ourselves accountable to those absolutes we see and fill the gaps. We develop the trust and balance that allows us to think independently. In independent thought, we unlock our creativity and imagination. We can use it to integrate our skill, knowledge, and experience. And that's how we become a professional. That's how we create that future vision. And what really happens is that all takes place unconsciously. You know, think about an athlete competing. They compete intuitively. They're unconsciously filtering, processing, and applying information. And this is what successful traders do. They unconsciously filter, process, and apply information. And what I help traders to do is to do that most effectively and also put them into a process that keeps expanding and accelerating their capacity and ability to do so. Keep pushing their decision-making further and further ahead of the rate of change. So again, it's the stuff we do at the foundational level that's most important as a trader. So again, if we think we're going to play follow the leader as a trader, again, epic failure. If you think you're going to follow a system, sit in a trading room, epic failure. Here's the deal. We want to keep reducing the amount of information we need to get through, and we want to keep accelerating our decision making. In other words, the more efficient our filters become and the faster our processing power, higher the probability we're going to have a future vision to see and do before others. So that's what intuitive development training does. It creates that future vision. In this process, it can't be outgrown because what it keeps doing is getting us further and further ahead of the rate of change. And not only does it improve our decision making as traders, it improves our decision making in everything that we do. So what I want to do, I've got one more slide here before I give you that information and answer your questions. With intuitive development training, my process works because it fills the gaps and breaks the bad habits that sim trading creates. It transitions us from a linear to an exponential development path. And it eliminates distraction and conflict and causes information and knowledge to flow to us. In other words, it cuts right to the chase. It gets rid of all the noise. We get the greatest return on investment of time and effort. We move from that linear path. When I talk about linear path, think first grade, second grade, junior, freshman, sophomore, junior, senior. Think 100, 200, 300 level courses. Think your career path. Think timelines and goals. That's all linear stuff. And that was all fine up until the late 90s. And what happened when we had the convergence of hardware, software, and the internet, if you continued on that linear path, you got destroyed. And that's why 9 out of 10, and I could give you some frightening statistics, but the overwhelming majority of professionals, people who think they know their stuff, they're absolutely competitively irrelevant today. You want to understand our economic condition? You know, think about the incredible advancement in technology over the last 30 years. In my mind, we should all be working 4-day weeks and they should all be half days. The only folks unemployed should be retired. We should have incredible abundance. There shouldn't be poverty. There shouldn't be war. We should be living in as close to paradise as we imaginable because of all the great gains in technology. But because we stayed on this linear path instead of moving to an exponential one to keep our decision making ahead of the rate of change, we've become incredibly ignorant. And I could go on, but intuitive development gets us on that exponential path. Starts getting our decision making catching up and then getting ahead of the rate of change, and it empowers us to become competitively relevant and to keep getting to a better place. So how can I help you learn? This is the free stuff I promised you guys. Now, do me a favor. Do a print screen, do a snip, do a screen capture of this page so you have it. I do not have your individual contact information. In other words, I cannot send an email out like I usually would at the end of a presentation to all of you. Okay? So you're going to have to copy this information. So do a snip, a screen capture. Okay? So you have it. If you go to infinityfutures.com and click on the Webinars tab, you'll be able to register for what I do every morning from 7 to 8. It's absolutely free. If you go to trustfirst.com/Achilles, and I think I misspelled that. Hold on a second. I did. Give me a minute here to fix that. I apologize. I had it misspelled. It's Achilles, ACHILLES.com. If you go to that, that's a page buried on my website. And that will have all of the detail on beating High Freq, Algo, and the institutional trader in great detail, greater detail than I went into today. And then again, I reinforce that every morning, 7 to 8 for Infinity Futures. Both of those are free. Okay? If you go and register at gotomeeting.com, I'm going to do a Q&A on intuitive development next Wednesday at 11:30. If you register for that, I'm going to give you free access. I'm going to give you free access to session 1 of my intuitive development training. And that is 150 minutes. It'll provide you with a very acute understanding for your current state, where you're at as a trader right now. And then that provides the developmental foundation to move forward from. So this is the Achilles.html page. It'll have in great detail everything that I talked about today. This is the GoToMeeting registration page. Make sure you read the instructions. When I see you register, you're going to get an invitation from me from Vimeo.com. You need to accept that invitation. Vimeo will tell me that you have. And once you do that, I'll be able to permission you to see my secured videos. They're secured, okay? You can't just go to them. So register. I'll check the registrations at GoToMeeting. When I see that you've registered, you'll get an invitation from Vimeo. Accept that invitation, and then I can permission you to see the slides. You'll get once I permission you, you'll get another email from me, and then you'll be good to go. And then this is my website, intuitiveperformance.com. And you can have you can play this video, Financial Independence and Futures Trading, and that will give you a great understanding. It's a whole bundle that really shows us how to beat High Freq, Algo, and institutional traders. More detail written out here. So if you go to this Achilles.com, if you go to this web page, then you'll be able to get to the menu. You'll see everything else. Gary, what do you mean you can't register for the webinar? Link is wrong. You may have cut and pasted. And I'm just going to copy the link right out here. Well, this is
Hey Ray, just so you know, I just typed everyone the address for that link. So if you want to, I will privately send you my email address right now. If you want to pop it over to me, I can also send it to everyone else. Okay, I'm sending you a private chat message.
All right. Well, I appreciate that. You know what? Because I'm a presenter, I can put that up too in the box to everyone. Thank you for reminding me of that. I forgot that functionality. I'm doing that right now. All right. I just sent that out to all. That's the clean registration. And I'll give you the other here. So you guys should have that link as well. And then also I'll do the same thing for Infinity here. So you guys should have all those links. And then the direct link to my website. I'll do one more here while I'm on the roll. And everyone's saying that the links are working now. So so there they all are. And I know I'm probably out of time. I know I got started a few minutes late here. But and then, James, I would just like to say, if anyone's still having trouble, you can go to intuitiveperformance.com and click on the contact page and just send me an email through there, anything that you're having trouble with, and I'll get you squared away.
There we go. Thank you so much, Ray, again, and you have a great rest of the day.
All right, Jim, you too. Thank you, everyone, for trusting me with your time.